Whoops. Help if I unmute my headset. We are back. Cool. We got SPY threatening a breakover, but watch that support level. However, think of this like a measured move to the bear side. We got this nice declining trend, accumulation. The idea is even a half move will take us right to that purple wolf pretty readily. Where'd that purple wolf come from? Well, I took the last known high in the pre-market here and ran a line down to, well, I think I did this on the 5-minute chart actually. There it is. Last known high, low 1, high 2, low 2. So you go from high 1 to low 2 and just draw a line. And in one line you have a price target. And actually that would be a full measured move according to the 5-minute chart. I don't know why it looks a little different on the 1-minute chart, but yeah, we're going to nail that. And here goes UVXY creeping on up for that. Well, now it's finishing the third bar right through that 200 period.
Die, SPY, die.
Right? Chance it with me, baby.
Yeah.
But check it.
I'm actually, I just took a sweet long
Oh yeah.
on, long means it's basically a future short.
Right.
But yeah, here, check this out. I'm just trading that one account right now, but yeah,
Nice work. I might
may
ride.
go for a long here now.
Hey,
Hey,
watch
Stone.
it at the bottom of that level.
Yep, there's a pivot right there.
It breaks that 2-hour candle. It's game on.
Oh yeah, that's right. Let's look at that.
That's right where it is. I know you can't see it the way I see it. My chart shows it differently.
Yeah.
But it's breaking it right now, so we have to see if it holds that. Sometimes they'll break and come back.
Right.
Anyway, I'm going to get off. I just wanted to share.
Yeah, man. Save that voice. I hope you feel better.
Thanks, guys.
Hey, I'll tell you what, brother. It was that Stone?
Yeah, I was stoned.
Yeah. Hey, Stone, make yourself some hot water, squeeze half a lime into it, teaspoon of honey, and a pinch of clove into it.
There you go.
That should do you good.
It's like a liquid throat lozenge.
It is. That's what I use whenever I've got a sore throat like that.
Oh yeah. Nice.
Oh, I missed my entry at 70. I don't know. 47.70. Those 70s are good.
We're still trending down on the 10-second chart, but there's a possibility of a little double bottom here. So I'm going to let that hash out before I decide to go short on that. And forward, man, we're setting up for an M top here, so we might bounce up and run to another peak back to 15, 18-ish. It's possible. It could just dump on over here. This can be a measured move as well. So same thing we're seeing with SPY here on a 1-minute chart. We got this nice trend behind us. There's your accumulation for a measured move. We're at about that half measured move already, and the wolf wave is complete. Although it's skewed a little on the 1-minute chart versus the 5-minute chart, it's still very much in play here. Dang, I wish I could adjust that right now. Oh well. And let's see here. Get back to my futures trading. There we go. Here's that little shake up here that I'm expecting. A little double bottom here, maybe. If it doesn't make us a double bottom, this will become a quick little accumulation bear flag for the rest of that measured move. And that can slam down. All right. Let's see if we can come up with a plan here. Steady. If I was to be looking on the ES, I could guarantee you there's a big order bar sticking right out at 39.25. In fact, I might show that real quick. Get the ESZ up here. Oh, it's sticking out at 39.30. All right.
All right, that puts me at 800 there. That account. Yes, Stone, that is on my Apex account. I've got right now. I've currently got 4 accounts. I've got 3 25K accounts and 1 50K account. The 50K account is still in the eval there, and it's set to renew tomorrow. But instead of paying the renewal, that's why I picked up extra 25Ks, because you have to hit 3,000. With 25Ks, you only have to hit 1,500.
Right.
And I still have a way to go for that 3,000, even though I've been trading like a villain. I figure, well, I dechained, I disconnected my my copy trader and just have that one account trading independently, trading full NQ right now. And figure I'll see, well, maybe if I can hit 3K on it today, I'll renew it. I'll actually hit performance before. No. I'll actually hit performance before it's supposed to roll over tomorrow, and then it'll be just equal to all the other ones. No, that 1,500 is a total over, I want to say 25 or 30 days. I forget which it is. So you have to hit $1,500 profit, and then it becomes a performance account, at which point they give you live $25,000 to trade on the market. And then after, I think it's 25 days of trading, you can take out 1,000 of each account. And then after the second 25 days, you can take another 1,000 out of each account. And then after that, I believe it's 2 or 4 times a month you can make withdrawals, unlimited at that point, however much you want. But if you have 10 accounts, if you bought 10 accounts the other day at $35, you take out 1,000 of each account, that's $10,000 total. Now they'll give you $10,000 clear for each account that you don't have to split with them. But after that 10K, then it's an 80-20 split.
Okay.
So I hope that wasn't too much info.
That makes sense. I mean, it's essentially like hiring a pit trader.
Yeah, exactly.
But doing it remotely.
Mm-hmm.
I've dreamed of doing that back in the day,
Yeah.
but I don't. I'm doing pretty good with my own money. But like I said, when you take that size into account, and it's somebody else's money, and you're allowed some drawdown, it takes a lot of stress out of it.
Yeah, I mean, literally, you're only if you get it when they have that deal going,
right?
Your only risk is the $35 per account.
Nice. This just broke over.
And I've learned some lessons along the way. I've learned not to trade right before J-Powell.
Yeah.
Or Yellen.
Yeah.
Basically, I've learned not to trade before any Fed decision or announcement. I did lose an account because literally it was trading so logically, and then I think it was like 9:30 my time. I think Jay Powell got up and said something, and literally the actual bar, the body of the bar stayed the same, but literally it wicked like 40% up, and then it wicked 40% down. It just literally popped the accounts so fast.
Rats. I just realized I'm trading the ES again. Getting out of that mess.
Yeah, no.
I was looking for that breakover, and I was dozing off.
Yeah. No, we're getting a nice reversal on SQQQ.
We might bounce up.
I think we're gonna reverse. Let's see if we reverse through this 48 here. Okay, we broke 48.
I was going to set up a trailing stop on that and see if we could write it down, but nope.
Yeah.
That bear leg
was
nice and tight, right to that wolf wave, dude. How did we know?
Let me have your screen pulled up. For some reason.
Oh, the wolf wave? Yep.
No, I don't have the screen pulled up.
Oh, gotcha.
Yeah.
Yeah, wolf waves are neat because you can literally deal with just trading the wolf waves, and you could get rid of every other line except for the angular resistance line on that channel.
Mm-hmm.
And just know that you could let this garbage shake out on the open, let it poke right back up to that angle resistance. That rejection off that sucker was clean. There was your bear entry right there. And essentially, riding to the target of that that bearish wolf wave was perfect. I mean, perfect. So you could literally make your trading plan with 2 lines. And
Well,
then,
we'll have to spend some time. You can show that to me there, bro.
oh yeah,
When we get some chance on that live trading.
let's see, are we gonna get our breakover or not? Let's see what UVXY is doing real quick. Kind of at the top of the range on that sucker. Ford's just continuing to cruise on down. We're just about that equal leg.
Which is what I want.
1490 is the price target for this leg.
Oh, okay. Well.
And this is
break it and I mean we could retrace all the way back down to 1470.
Oh, absolutely.
Do that. If we do that, I will be in good shape, happy. I will sell right there because I made enough on that call.
Oh yes. So just to
so
give
my son-in-law and my daughter, they're still kind of financially dependent. So we've been helping them, find their legs financially. She's been doing Upwork with video editing and brought my other son-in-law to work with him.
cool.
But her husband, we have Great Danes. We've already bred them and sold a litter before, and this time, the female, she got pregnant again. So we gave them control to take care and sell this litter because he's always wanted to open a Camille.
Right.
And they consequently just use some of their profit to buy 2 Belgian Shepherds because they're very popular down here in Brazil as guard dogs. But last night, apparently, they still have 4 Danes left, 4 puppy Danes. Puppy, I mean, like 2 months old, but they're almost 40 pounds.
Pretty good size.
And they've got the 2 Belgian puppies. Well, last night, all 6 of them, found a way to break into the chicken coop.
Oh.
And
They went
I
to town.
guess killed. Yeah, I guess killed about 8 of them there. So they're actually heading out right now to buy some more pinchinos to start growing them back to
get some chicks.
Size of eggs. Yeah.
They're so cute. I love chicks.
Yeah, that's what they're called, chicks.
Yeah. I used to go to the feed store and pick up a few chicks every now and then, and just we didn't really slaughter our chickens. We just kind of let them live their days. But we collected the eggs back in the day. See, when I lived in Montana, I lived in a neighborhood where covenants prevented me from having chickens. However, my dad lived right down in Hamilton, so we'd always raise the chickens at his house, and we'd just drive down there to visit every couple weeks or so and collect some chickens or collect some eggs.
Yeah.
Man, there's nothing like farm fresh eggs.
Get a break on that SQQQ there.
Well, look at UVXY. It made the exact opposite chart from SPY here on that measured move, right? Now we're hitting resistance there, so we're likely to bounce bullish here on SPY, and also Ford will take a bull leg too. However, let's go look left a little bit for our control zones. So let's have a look at the 30-minute chart particularly. Turn the lights off here. We're below pretty much all of these other levels, but we're still within a range bar here, right? So let's see here. If you're looking at the range bars, these 2 guys right here from yesterday. And I know that Stone was looking at the 2-hour bar from the 13th here, but his TOS chart shows that a little differently. So I'm going to go with the.
Yeah, I find it interesting that same data, but our systems are
just a little weird. And we've got kind of 3 bars in straight control because yesterday we just kind of played in a range, right? Well, we've got a short range and a long range, but we're below all of that, just barely, except for this guy. This wick was our low yesterday into the close. So we're in that control bar now. Let's hold the cursor to it. got a hammer that wicked almost a little bit below that wick on yesterday's close, but the body is starting to walk back up. So there's a good chance we get a tweezer top and a tweezer bottom together, meaning there's total indecision there. So the 2-hour chart would probably pop up just a big doji. And the daily chart is already in motion to make the rest of that bearish move for a bearish measured move, where we got the bar, spinner, bar. So we're still biased a little more bearish than bullish, but in the short term, we're likely to bounce back up in that range. But here's where we set the key pivot for this. Right at the bottom of yesterday's 30-minute candle at the close there. And it's like 392.05 or 06 or whatever. It just has to be close. You just want to know where the meat is on that sucker. And let's change the color of this. Get it yellow or something that stands out. And then go back to our 5-minute chart. Alright, so if I was streaking a bearish trend on SPY, there's where you'd expect your pause candles right on that wolf wave. But if we're going to continue to crawl down, this is the time of day where things move a little slower. They still move. And oftentimes you'll either get sideways accumulation in a range, or you'll break it and roll into a next leg. So we've already got a full measured move here that's happened, right? But we're right in that key pivot where price is now. So watch this next 5-minute candle close, and that's going to tell us a lot about where we're going to go with that yellow zone from yesterday's low just before the close. So this is where you basically are hands off until you find the direction on this trade. And I'll throw that 10-second chart back up here so we can kind of see where the price ladder looks. See, we've got market maker orders in odd places. So we got 39, 35, 75 up here. Let me zoom in on that. Where'd my mouse pointer go? Sometimes I got to walk it off the screen. Maybe I went too fast. I left it on the other screen. But see, these market maker orders stand out, and they're usually at $5 increments. But when they start doing weird stuff like this, where they pull it off the book and move it up, if it doesn't move in $5 increments, you know that's just bait. So this is going to probably close in a wick right here, where we're going to see retail chase it. But the real order is probably going to be right around, let me see if I can zoom out a little bit and see it. There it is, 39.40. And there's probably another one somewhere around 39.35, but we're already there. So if we can't get out of this resistance, and this is just another double bottom, right? We've already come through R1. This is a repeat. So it became a double bottom here, failed, rolled down here, made another one. So then you got low 1, ignore these. Count this, 1, high 1, low 2. High 1 is the resistance level we broke out. We went right up to a pause at the previous high 1. And then we went just barely in that control zone underneath this control bar here for target 1. Wasn't much of a trade, but there's your target 1. You can look at my crosshair, it just lines right up with this little M top here. If we don't touch target 2, the top of this control bar here, this can break over with an M top here and run bearish. And when you start to see these price ladders where you get these big orders that sit there, pay attention to what they do. So you still got a fairly sizable order here at 39.40, but you got these bigger orders sticking out in weird places. They're not in $5 intervals. Market makers love to push $5 intervals on this chart. This is from my observation, my experience, so don't quote me. I'm still fairly new at futures trading, but when I see these orders in weird places, they usually get jerked off the book within a tick. So as soon as price threatens to close an order there, they go away. These gray bars are completed trades, right? So when these bars were sticking way out in this range up here, they closed. They actually moved, okay? But they were in weird places. They weren't in $5 increments exactly. So if I was to take and grid every $5 on this chart, it'd make a damn mess. But we know where to expect those orders in $5 bills. And when they keep pulling in and out of the book here, watch for ones that don't go away, and that's your price target.
Yeah, I wish I could get that same indicator there. That's what I'm trying to figure out where that is, if I have it. I hate to have to download Tradovate just to get.
Right. I know what you mean. And then just kind of an FYI, we are
Yeah, I heard.
finishing the details with TradeStation too. So
yeah, you were saying that.
if we get the deal we want, what'll happen? It'll be tiered. And if you deposit like $500 in your account, they'll throw a $100 bill in there for you. Well,
yeah, I don't got that right now.
That's later on, like when you're looking at that, if they go for $1,000, they'll give you a little more. $10,000, they'll give you a little more. It's a tiered structure for what they'll kick you back for opening and funding an account with that amount. So
yeah. All right, we're getting a break.
There's that breakover.
That's QQQ.
Yeah. Here it comes, and watch that wolf wave. If it breaks the wolf wave, it's game on for a three-legger.
I struggle to see how, because we're already the oscillation on the MACD, stochastic slow, and the RSI. We're already bouncing off that way oversold or way over bought area.
But remember what the daily chart told us.
I know.
We're looking at a bar spinner bar setup for sure. So I really think we're going to probably close at about.
Now, what are you calling spinner? You took that star there? Is that what you're calling a spinner?
Doji.
Oh, okay.
Okay. Doji, spinner, whatever. People usually see spinners at top or bottom of trend, and they call it a spinner. I just call it a spinner when I see the short-term panels. So yesterday was the day before yesterday was a bar. Yesterday we closed a doji. Today we're expecting to close a third candle in this equal to the first candle. So you get bar, spinner, bar. We see these all the time when we're day trading, swing trading, whatever. When we see these, it just sets up a basic measured move. So
yeah,
you look at it on the 2-hour chart. We've got trend, accumulation, the measured move trend takes us stinking low. So
yeah, it's funny. I took I drew these lines here on the chart here like a week ago, and watch how it just bounced right off of it.
Right. There's your wolf wave again, right in play.
Yeah.
President is
me or your chart?
My chart.
Oh, okay.
That purple wolf.
Yeah.
President is supposed to speak on railways. Oh, yeah. When? What time? I wonder.
Question. Does anyone really care?
Now. Oh, okay. Not really. However, it's kind of a big deal, because if the railways go on strike, dude, a lot of goods do not move. And, all these preppers who've been saying things like, buy a bunch of canned goods, they're going to be the last ones laughing if that goes down. So we hope that the railway workers do not go on strike, because, like I said, no goods will move. And that includes a lot of energy sector stuff like coal, other things that are moved on rails. They run liquid natural gas. They'll run all kinds of fun stuff on the rails that are related to energy, fuel oils, stuff like that. But also there's like grain, produce, every good you could imagine that is consumable moves on the rails primarily, and then goes to trucks. So
now help me understand this here real quick. Okay, so my forward puts, when they were sitting at 3 cents, my P&L for the day was -40. When it tapped 5 cents, it's still -40. Well, why is it like that? Is that just the Thinkorswim or a Ameritrade thing, or is there something that I'm not understanding about?
That might be, because I mean, if you were still
I don't know enough about options, or
well, it might be just the way they display data, because the real numbers are what's going to matter. What's it worth versus what your cost was to enter it. That's all you really need to know. But there's other moving parts of it. I mean, there's delta, theta, and all the Greeks in there. But primarily, for our intents and purposes, we just need to know what our risk was and what our profit's going to be. So percentages, you might have to calculate them yourself if it's not showing up correctly, or there's a chance that maybe it's showing you what the percentage would be, including the commissions on the trade. So that might be a factor as well.
If we drop back down to the 3 cents, I may pick up another contract at it. Or what'd you say? Maybe go out to next week, was it?
Right, next Friday, and that's what I did with Ford. So I rolled my calls out on that run to next week, and then I've got a zero risk position on that. So I paid
30. So the 23rd you looked at. What did you do? The 1450 on the put.
On the put side, I purchased those puts. Yeah, the 1450 puts on that breakover, and then I'm looking at the possibility of turning that into a zero risk position as well if that starts to accumulate in my direction. So if I'm long the 1450 and I'm looking to short the 14, I want to see that they either equal in value from my entry price to what I sell the short put for, or I want to see it exceed. So if the short put is going to pay me more than I paid for that the long put, I'll just roll with that because that's a full on can't lose situation.
Yeah.
But
what it gives me, just keep seeing Ford die off all day.
Right, and what it gives me is an opportunity to next week, if we're staying in this range between 1525 and 1450, where the pivots are, we could just leg in and out of those and swing trade the short contracts and leave the long contracts alone. So
yeah, but and here's maybe this is just what I'm not understanding. My puts, right now it's sitting around 4 cents.
Right.
Is it worth it to roll over, because these ones are 4 cents, so if I sold them, I'd probably get $20 back from them.
Right. Well,
that's why I don't understand, because the puts for next week, those are sitting at 1450, sitting at 23 cents. Now $14 is 11 cents.
Right.
But it doesn't. To me, it doesn't make sense how you can roll it over when you sell one and the other one's much more expensive.
You can keep the one position open and buy the other position before you close the first position. So what I was looking at, like on the call side, I went and bought into those as it was running up. But looking at the put situation, I mean, I got into those for 18 cents, and the 1450 puts with 923 expiration. So look to the next expiration. If the $14 put makes it to 18 cents or beyond today, I can go ahead and basically just lock in my profit that I've made on the daily price action for today by doing so.
Yeah, right now the 14 is 11 cents.
Right.
Yeah.
But if it gets to 18 cents at least, then I can literally make it a zero risk position on the full spread. And then if price continues into the second half of the day to walk again between these two pivots, if it just trades range all day, I can also day trade the short contracts and profit from those during the day. And if they get to a point where I'm making 50% on the short contracts, swing trading them, and still hold a long position on the long contracts, I can do it again and again and again, and then I can literally generate income with a buy right strategy on each leg over and over and over again until price decides to trend. So it's like I can take a neutral position and have opportunities to do anything that's necessary with it to adjust the position. And if you're just beginning options, it's a little tricky to do, but I'm trying to be able to be diverse enough to cater to the diversity of our members here, because some of our members experienced, some of them are not. So let's see what's going on here. Oh, yes. I'm going to have to go put up TrendSpider. They've got real-time futures data now. Excellent. Oh, that is great news, Sig. Thank you. If you look in the chat there, futures trading or futures data is now available on TrendSpider. that is going to be a godsend because that'll set up all the dope that I put on my charts for you guys. You're going to see it automatically produced on TrendSpider. And then if you want to kind of keep notes on the way my lines are all set up on TrendSpider, just turn on the all lines function and then double click the ones that are important to you and then turn them off. Make your line drawing a lot easier. It does it for you. There's a great value in that. Also, if you go to the Bullish Bears website and click on the TrendSpider tab, go drop down our Tools tab, and then go to Discounts, and you'll see TrendSpider's link in there. Click on that. That'll get you a deeper discount. So, all right. So I'm watching this 10-second chart. Basically confirmed a little double bottom here. I didn't end up trading it, but I'm watching it. And we got yet another double bottom setup. But if we can't break R1, this is where R1 is, where the first high is the idea why I call it R1 is you just draw a pivot there because pivots are both resistance and support. So when price is below a pivot, it's resistance. When price is above a pivot, it's support. So for now, since price is below it, it becomes first resistance, or R1 for short. And if it rejects R1, then we make a bearish entry on a double bottom and ride the momentum back down. And what I'm kind of expecting here is a little range expansion and a descending range expansion. So if this wolf wave holds for the second half of the day, we could expect some accumulation and possibly run back to that upper range limit. So probably around the middle of the day, I'll be looking to draw a bullish wolf wave to boot. Oh, whatever happened to our diamonds from the other day? Let me go look at that.
Yeah, I was going to say, do you consider 2 wolf waves to form a diamond as well?
No, almost never.
Okay.
So what that tells me is, let me go out a little further. I wonder if I can get it to where I can draw it down further. So essentially that kind of nullifies that diamond because, I mean, when you think about it, it's kind of a major move. But let's look at the 2-hour chart. Can I see that diamond there? Yeah, it's right there. That's actually 2 lines right there. All right, so remember our measured move setup? Diamonds are still valid. It just takes us to the measured move, and it's possible today or tomorrow. So I'm going to leave those lines hanging out kind of long, and if price starts to walk down, I'll be able to look at my 5-minute chart, zoom way, way out. And if price is way down here, I'll be able to expect a target by extending those diamond lines from the other day, or from yesterday. These guys here. And gosh, there's 2 more from way back too. Amazing how valuable those diamond patterns can be, man. I mean, they was from way too long ago, but they're still valid. Good Lord, how far back did I draw those? I think that was like before Jackson Hole, if I'm not mistaken. Oh, those were trend breaks. Never mind. We'll get back to that later. Oh, look, our wolf wave. How about that? Range expansion with a 3rd leg break. Now we're back to that critical pivot from yesterday's 15-minute low, just before the close. This is where the deal is made, whether we're going to get bulls to exceed this and run up to the next angular resistance, or if they're going to reject this or get exhausted and the bears take over and run this back down. Man, those wolf waves are friggin' great. Yes, this will either be a pullback in our bearish trend or this will be a reversal, and it's looking like a reversal for now. We just printed a bar through that key pivot, and the 5-minute bar is looking to exceed it. Let me get the futures chart up because it's got a time clock on it. We're in about the last 45 seconds of that 5-minute candle, so let's see what we get, because if this closes a nice big old 1-minute tweezer here and then the 5-minute candle starts to look like an inverted hammer, we'll have a signal that we can use to trade on. Let's look in on my my Condor situation for SPY here. Kind of net neutral at the moment. We're well, actually, it's net 15% profit, so not terrible. And I've held that for way longer than I would be able to hold a strangle day trading SPY, because the time decay would be horrendous in that move. However, this position, being that it's a spread, negates a lot of that time decay. The extrinsic value, or the value outside the money, will start to deplete later on. It probably won't take a really serious effect till tomorrow afternoon, maybe even wait till Monday morning. But nonetheless, I want to hold this trade for no later than Monday. Ideally, I'd like to either trade it today or tomorrow. And it's just a series of $1 wide spreads outside the money on either side of price. Many would know it as a long iron condor. Alright, while I was yapping, that 5-minute candle closed a bar. Let's see if this gives us a tweezer right here. This is interesting now. We got a 1-minute inverted hammer coming back down to test that pivot for support. If it holds that pivot for support, we go long. If it breaks that pivot for support, we run back a retrace down to about 391.60. And the 10-second chart's kind of starting to lean that way. Let's see if it continues holding underneath that 8 period there. Starting to get the hiccups. What do you think? Is it snack time yet? Retro, I got some personal messages here. Okay. All right. Well, we're starting to look like we might trend here. So this can be a leg running right up to that angular resistance here. And that angular resistance was just an extension of a previous trend line from pre-market till, well, now. And we can stretch this out later. We can stretch this all the way into the close if we want. Same goes for the wolf wave, but I can't get it there right now because it's well below where the price action is currently, so I'll stretch that out later. But whenever you draw on your chart, if it's a meaningful line where you see price respecting it later, extend those lines because they will become valuable later. All right, nice M-top on the ES chart. Weird levels for the legs below, but nothing at the $5 levels from the market makers that are standing out to me here. The only one I see that's significant is, gosh, none of them. I kind of wonder if this has to do with tomorrow being the quad witching day, that the market makers are kind of just here to provide liquidity instead of setting up their targets. So anytime you see an order sticking out like this, that's a big limit order. A lot of it is retail or limit orders as well, but for the most part, when they stick out to be a lot of volume like that, that's typically going to be a much more a market maker move or a market maker limit order. All right, now we're starting to look a little more like a measured move setup on the 10-second chart. A lot of people will see this as a triple top. This is where you start drawing lines on a 10-second chart, and I'll show you what I mean here. Boy, let me see if I can. Sorry, Ford, I need your space. There we go. So essentially, you're just going to look for the compression zone. So let's say 39.42, draw a line. By the time I get this drawn, it's already going to be too late. I'll tell you that right now. Support right there. So when this is a move, a trend, this is your compression zone. A breakout of either side of this is going to tell you short-term sentiment and give you a trade idea. And all you got to do is wait for the break and get in on the action right at the break. That was a little bit baity right there where that big bar came out of nowhere. Remember, accumulations can trap both bulls and bears. So the smart trader is going to wait for this to shake out. And I'll probably knock this off in about 5 or 10 minutes here anyway. Got to get lots of little things done within the organization here. We're working very hard to basically rebuild the website, make it function a lot better, and then there's lots of little detail work that we're doing behind the scenes to kind of produce the highest quality content we can get, also consistent content, and then we're also more or less organizing the vast library of blog posts that we've made over the years in a way that we can make it more navigable, where you can openly search it much more efficiently without having to use Google. Because I'll tell you, there is a large number of very well written articles in that library that can really help you understand how to trade the market efficiently. And it touches on everything, even trading psychology is in there. There's a lot of trading psychology in there, in fact. And there are some articles that are not quite as good, and we're kind of weeding those out, or even going so far as to rewrite them. And the idea is to build this vast library that everybody can get into and gain advantage from. And then some of the more advanced stuff we'll kind of keep internal for our members. There's some stuff that we have in our internal next level library that is just incredible what you can do if you start learning that route. Once you get to be a more advanced trader, that material will absolutely put you to the next level. Then you start doing cool stuff like SIG does. Alright, so we're still sitting in the stupid range on the 10-second chart, kind of going nowhere. But we're setting up for a move. If you want to copy me and kind of draw this area on your chart, you can do it with a 1-minute chart too. You can just put some lines in there kind of ranging that price. The longer this accumulates, the more likely it'll be to actually break down and retrace 50%. Down here to about 391.50. But if it gets to a point where it starts to equal about a half of the leg in length, if you just took a set of dividers from trend, half trend to half accumulation time, it'll give you an idea that right about now we're going to get the 1-minute candle that seals this deal. And once we break that range, we might get that sentiment real quick like. If you're going to trade that bearish, your target's going to, of course, be a 50% retracement. I like to place it a few ticks higher than that, so go to the next dollar. So the trade would be from here about 39.37 to 39.33. Gosh, I want to switch this to an MES before I go and do that. What the hell? I've got account size. We'll make it work. I might be quiet while I trade it though. See if I can tag it on a retrace. I'm not going to get away with a limit order on this. Sorry. If I hit a market order on that, it'll put me at the bottom of one of these candles, and I don't want to be there. I'd rather be on a retrace. Unless I can time it exactly right.
Yeah, basically with this 50K account, I'm trading it like I would if I were trading micros, just taking the same trades, because I figure, well, I've been profitable on the micros, so let's just try to trade this one with the minis the same way I've been trading the micros. So far, we pretty good. Keep adding to it.
Nice, good work. I was expecting that retrace, but now this is interesting. We're back in that stupid channel.
Yeah. I went in that last $60 was when it broke. When it broke here.
My ideal entry would have been on that wick right there. I would have had that limit order set. And the idea is I wanted to walk this trend a little bit so that I could slip in a limit order just under my entry as a trailing stop, and I would have caught a little profit there. But if I didn't set a trailing stop, or if I didn't have the ability to set a trailing stop, this would have killed me.
Yeah, well, that's why at the bottom of that wick there, I
went long.
Well, I went. No, I didn't go long. I was short. The red one comes first.
Right.
So I went after we broke that 8-minute. I went ahead and jumped in with one, and then we came down, and I was waiting for continuation. But then when we came back up, that's where I sold it because I was like, no, it's gonna reverse.
Right, or bought it back. Yeah.
Yeah. Come back into the channel.
I hesitated a bit because this account is still relatively small.
Yeah.
Let me see. I'll slide it off here so I can get my P&Ls up without giving my account number away. It's just a little over $1,200 in that account, so I don't want
nice Seagull.
Don't want to take a full ES contract just yet. I'd rather keep trading the micros or the mini, or the micro. Yeah. So, But I mean, like, this is that account that I started with $100 after I took distribution from my Boone from the Jackson Hole thing. This is the account that I had started the Monday after with $100. So not too shabby to push that to over $1,000.
Yeah.
Nice work on the P&Ls there, bud. Oh, very nice. Hell yes, dude. That is some smooth paper trading, baby. Good stuff. I give you all kinds of props. Let's throw these on there. Applaud this dude. Seagull's good.
Take some towel.
But yeah, I'm not quite ready to take full-on ES contracts in this just yet. But I was watching that for those ladders. I'll see if I can switch to MES and maybe catch one scalp before I sign off. Why not?
Yeah.
Maybe.
Well, I took a couple NQ there at the beginning, and built up a cushion to where I was like, I can go ahead and stay in the. Got enough cushion there to work with. All right, so Ford's accumulating.
Cool, my line's transferred. I was worried about that. Yeah, Ford is accumulating here. And so far, my Iron Condor on SPY is like still net positive a couple bucks. It's not spectacular, but I could close the whole thing now and maintain a profit. When I'm trading those, I'm trading a little size on that. I'm only doing like 40 of each, but
40 contracts.
40 spreads.
Oh. Okay.
But I mean, something that cheap, dude. Sometimes I'll go for 100 spreads on each side of that.
Now, what's the difference between contracts and spreads?
Spreads are just made of contracts. So it's long one, short one, and the width of the spread is important. I'm running these on $1 spreads.
Gotcha.
I'm still net profitable about 15% of that whole deal, so not too bad. And it's just I'm sitting here waiting for it to grind sideways and break out one way or another. I'm in a neutral position, still net positive, and time decay is not really beating it up too bad.
Yeah. I'm just sitting there watching this Ford right now. I'm basically break even. The calls were where the puts are right now. So it's all dependent on which way Ford goes. I want Ford to dump.
Right.
No. Apparently the bill for the rail workers got shot down. So
they might go on strike after all.
Yeah, I don't know. Excuse me. I don't know what all it entails. I just had a tweet come through. I think McConnell was sitting there saying that the Republicans proposed the bill, Democrats sunk it. I don't know if the Democrats have a counter bill. I don't know. But I do know at least one of the bills were shut down today.
Yeah. Just one hand doesn't always wash the other, I guess. And
no.
It's great to have two wings on the same bird, but when one doesn't fly right, it just spins in circles.
Like one track on a tank.
Yeah, exactly. All right. Eventually, this will break, and the idea with my spreads on SPY there is if I start to see that the short legs are running, below 10 cents a contract on that, I'll know that that's going to really start hurting the extrinsic value of my long positions. So the idea is if it starts to get to that point, I'll just knock this position off and roll it out to either a later date, or I'll roll it in tighter and closer to the money.
Yeah.
During the middle of the day, when volatility slows down a bit, so does implied volatility, and the delta skew is a little easier to manage where I can do that. The idea is to have enough in your account of liquidity to be able to enter the next position before you exit the first position, so that you have it on just the same way I did with Ford.
Yeah.
That way you minimize the slippage in the situation.
Well, we just broke the 8 again on NQ. And
There we go.
executed.
Yeah, this is starting to grind out. I think we're probably going to have an interesting bar 41 today, and we could just play in this range between the two key zones all day long.
Oh, I want to go in, but we're trading in the yellow zone on my RSI.
Yeah, it's the middle of the road.
That's why I color code them. That way I know where I am. I don't have to look at the dollar amounts. I know exactly where it is.
That is the best statement ever there, Stone. The brains are in the middle of the two wings. Yes, sir. Absolutely. That's a
now
good attitude.
would that be the people of America being the brains?
We should hope, but that remains to be seen these days. I mean,
well, you know, a brain does have a left and a right too. So
true.
Yeah, I'll stop there.
Yep. Yeah, we don't want to get too deep into the minutia of politics here. We're traders.
Yep.
We do what the chart tells us. But when there's politics on the table and being discussed, we like to pay attention to when they are, because news events move the market. Back in the days when Trump was in office, all those tweets, all those Trump tweets, those were great trading signals, man. He would say a tweet and the market would about face, and it would just be so easy to spot and scalp the living tar out of it. I mean, it was just nuts.
Yeah. Well, I'll tell you what, though. The States don't have nothing on Brazil when it comes to politics.
Yeah. No, there's some crazy stuff down there.
Yeah. I've got, I run a group here for the people we work with here, and it's so hard to keep politics out of the group on the WhatsApp. And it can get ugly real fast.
Well, I liken it to the inefficiency of Congress. If you start a group that's about a specific subject that you want to focus on, and you start talking politics, you're basically turning that group to be just as inefficient as Congress. So you're wasting time and going nowhere. So it's best to just stay out of the politics and focus on the task at hand.
Yep. Here's the other thing I look at.
Nice red candles. Oh, this is going to be awesome for my position here. So if we play in range today, here's another thing that you can do with a SPY iron condor like this. If in fact it is going to hold range, you can essentially, since you've used a short contract to pay for a long contract, let's say that the short contract does go below that $10 mark, but you expect range to bounce around in a range, you can close the short leg and open it back up again later for a net positive spread. So it becomes a credit spread even though it's built like a debit spread. Same thing I was talking about with Ford. This is like complex.
So you're talking about on SPY then, not Ford.
Yes. So my initial risk on that entire position in SPY is just $12 per set of calls and puts spreads. All right. So you can do 10, 20, 100 of those, whatever you want to do. SPY's got plenty of liquidity in those options to do so. But if you start looking at the difference, so like I got the 415 short call is trading at 14 cents now. The 414 long call is trading at 16 cents right now. Well, what were they when they first opened? Let's look. So my average credit for the short contract was 20. So that's currently positive 30% or $6. Let's go to the long contract. Long call, average cost 24 cents. And currently that's down a little. It's down $8. So that's down 30%. So it washes, more or less. Let me go to the put side. So the put side, I'm looking at the short put cost was 64 cents. Okay. The current price of that sucker now is 97 cents. So that's a huge loss. That's 50% or 51%. It's down about 33 bucks. But the opposite side of that, the long put, average cost was 73 cents. It's currently worth, let's see here, $1.10. And that is a net positive of 37 bucks, which is pretty much a wash with that 50% loss on the other side. So if for some reason I see those contracts go to $1 or a penny, I can buy the short contracts to close and have basically almost a net free position on the long strangle, and I didn't have to put out a whole bunch of money to hold it. So if we do bounce around in the range, I can build that, and then if the range continues to swing one more time after that, I can go and sell those short calls again and essentially net a net positive between the two strikes. I could literally, at that point, use the short that I bought back for a penny to take and almost nullify all the risk I have in a long position, and if it rolls back up, I can go and sell it again and have a net positive position, so it'll overlap the amount of premium I spent on the long position. Neat stuff.
Oh, I missed that candle.
But options are so complex, but so simple. If you know how to use spreads like that, man, you can do some serious profit margins with
there's a difference
risk.
There's a difference between simple and easy.
Yes, absolutely. And once you get the hang of being able to run through all these spreads and utilize them like this, dude, it opens doors for you. And that's what I'm talking about with that next level library. Is we explain very methodically how to do that. And it's crazy how little money you need to outlay to have a huge amount of leverage in the options market. And that's going to absolutely destroy the difference between that and the people who just buy and sell options and swing trade them, because their risk is the total premium of the contract, and it's long. They're buying to open and selling to close. This strategy is you're doing both to open.
Yeah, I hesitated on that candle there.
I did too.
I saw it break. Well, I saw it break. It broke the 8. And I was watching 47.70, watching for that break, because if it broke, I knew it was going to shoot up.
Mm-hmm.
And I saw the break, and I hesitated. That's probably my biggest.
Oh, you're in the MNQ.
Yeah. No, I'm just on NQ right now.
Okay.
NQ and SQQQ.
Yes.
Yeah, I use those two. Those are my inverses. I use SQQQ as my gauge.
So as always, the long story short is once you've mastered these strangles, dude, it opens doors to be into that next level trading where you can be like, aha, I can take and cut my risk not just by half, but by like 90% running spreads instead. And your outlay
spreads instead of strangles.
Yes. And
maybe we can walk through that here sometime.
Yes. And the difference is if I'm running these kind of spreads where I'm running short legs on it too, with Ford, I can leg into it one contract at a time because the outlay for the long contracts is very little. But the outlay for the contracts on SPY is a lot, plus the volatility between them is insane. So the difference is you would open the spreads together at the same time on SPY versus on Ford you can leg into the spreads one piece at a time. So you're doing one spread at a time on SPY for your Condor, and it essentially functions the same way as a strangle. And you're going one contract at a time on Ford. So your long entry and your short entry can leg. And so it can be on both sides of price. It can be on put side or call side. So the complexity is a little bit hard to wrap your brain around, but once it makes sense to you, it just clicks, and it's like, aha, I know how to minimize my leverage or minimize my risk to almost nothing, and sometimes negate all my risk and have a net positive position so I can't lose. So that's...
Now That's what I like.
That's
what I want.
exactly it. And that's the whole point of learning how to run these somewhat complex option strategies in the most simple way possible.
Mm-hmm.
And I love giving examples with really, really cheap positions, because if someone by chance follows me into these trades and they start to freak out about it and close it for a loss, they're not going to lose much. Then I feel better about that, because one, they get to learn. Two, they're not like blowing up an account in one trade trying to follow what I'm saying. So
Mm-hmm. Yeah. Well, that's what I love about Apex is, if you blow an account, it's, blowing $35
right.
is a whole lot better than blowing, $1,000, $2,000.
Oh, absolutely.
So it really, honestly, like I said, I've been trading, well, I've been investing for years.
Mm-hmm.
But my investments just could not keep up, and we're so,
That's
what's the word I'm looking for? Um,
risky.
we're so, no, risky. We're very market dependent.
Okay.
Um,
Yes.
and and so even though I went for, key fundamentals, it was still really hard to. I mean, and I didn't have tens of thousands of dollars like some of the guys that I knew. And so then I took my knowledge and started going into swing trading.
Mm-hmm.
And as I told you before, did really well with that. But even at that, with what really frustrated me was how badly, how easily the stocks can be manipulated.
Oh yeah.
Whether you go for a stock that fundamentally it's like this stock should be at this price based upon market cap, cash on hand, zero
Mm-hmm.
debt, but then you have
So
Hindenburg comes out with a in my opinion, legal short report,
right.
um, to just literally short the stock into oblivion, and it's like it's not worth keeping anymore. And it just that's one reason I came into futures trade. I actually started futures trade about 3 months ago, and found that I'm able to use my knowledge and understanding of charts and etc. Um,
Exactly.
and
Did
have been, and I've just been using using the Apex accounts. I tried one other one. I tried Lilo, but there's some real issues with their setup. I mean, they claim to have been around before Apex, but their system's not as smooth, and their overhead is greater. So I tried. They gave like an $8 per account special one day, so I went ahead and picked up 10 accounts
there you go.
and tried, and it just their system kept locking up on.
Ah,
So I was just like, okay, yeah, no.
enough of that crap.
And
Cheap,
yep.
cheap
So
is
I'm just
not always
sticking. I
good.
just stick with Apex. Yeah, I just stick with Apex, and I have some friends up there and some other ones. Top Step, One Up, Iron Beam is an actual. It's like Ninja actual account. And there's a few other ones, but I've just been, plugging away with NinjaTrader, learning futures, and I've actually gotten to the point now to where, knock on wood, I've not been blowing up my accounts. But the thing for me is I'm my overall profit is much lower than I want it to be. So I'm trying to work on figuring out larger moves, how to
Right.
work with that better. And that's where you guys have been coming.
Oh, we'll get you there. That next level day trading is what we're doing now.
Yeah,
So
yeah.
I wanted to touch base on something about investors, and it's kind of a thing where I found that most people who do invest don't have time to trade, so they're busy with their lives.
Yeah.
So when I first moved out here to Virginia, in my local neighborhood here, I started a little investment club, and we would meet once a week, which was exhausting. I had to turn it to meeting once a month, but we haven't met in a while. But while we were going strong there for a while, I was teaching people who would ordinarily be buy and hold investors how
Mm-hmm.
to trade the wheel trade strategy.
Hmm.
And these are people who are really good at doing their fundamental analysis and finding companies with growth and everything, all the metrics that play into what you would want to invest into, right? But they were looking to maybe increase their returns a little bit. They were used to averaging, a net 10% return in their portfolios a year, which doesn't even quite track with SPY. I mean, just to compare, it'd be easier just to throw your money in SPY and hold it. But the strategy I taught them was how to generate income from their investment positions. So every 100 shares of a stock they had, they could sell a covered call on. And also, if they have cash in their account where they're only investing with like 3% of their total account value or whatever the metric is for investors, most of them were 10% typically. The rest would be cash earning interest on idle cash, but the percentage of their actual investment was able to be liquid. So meaning they could add to that position, and a lot of times they would go and average down. I'm like, well, let me show you a better way to average down. You can sell that covered call. You can also sell a cash covered put. So you're literally getting paid for the market to come to you. And if the market's bearish, those covered calls you sell are generating a lot of income. So are the cash covered puts, and you're averaging down with a cost basis below the actual price of assignment at the time of assignment. So you're able to average down with a bearish market at a rate that is going to be higher than the decline. So even in a bearish market, you can have cost basis below what your losses would be because you're generating income on the way down. So when the market does cycle back up, you can then take and roll it in the same way with selling calls and puts. But then your puts start generating a lot more income in a slightly bearish trend or even a major bearish or bullish trend. Bullish trend. And you literally turn that 10% a year situation into probably closer to 1,000% if you do it right. And you're just renting out your existing positions, so to speak, by selling options against them. So this a couple of prodigies in that group. There's always a couple of really smart people who pick it up and run with it. This civics teacher, middle school civics teacher, I would love to get her interviewed on our YouTube channel someday. She was basically investing with her daughter's college fund. So she was looking to send her daughter to a local college or maybe a slightly better college, maybe a state college or whatever. And that's about what the fund could do. And she was anticipating when her daughter was ready to go to college, she was going to be able to afford that. And she was averaging about 10% a year over year in her portfolio, investing in just various companies. And I taught her the wheel trade strategy. And I kid you not, in the first 90 days of running the wheel trade strategy, her overall portfolio performance was making 300% in 3 months. It was about 100% a month returns on the wheel trade strategy alone. And she was showing me. I'm like, yeah, I'm betting your daughter's going to go to a better college now. And she's like, yeah, she's going.
An H pattern on SPY.
Yes, I see that.
It's look at that wick. I'm sorry, I just had to interrupt because it's looking like a reversal.
So long story short, thank you, Stone. That is looking like a double bottom reversal here on a 5-minute and a 1-minute off of our wolf wave yet again. So long story short, her daughter just started college this year. She's going Ivy League. That melts my heart, guys. I'm telling you, because that is awesome to be able to be a part of that. And that's why I would really, really love to interview her, because I want to get all the details on how she picked it up so fast, how she ran with it, how she just completely blew away her expectations with it. And there's a couple other people in the group who, I mean, did much, much better than 10%. I mean, they're still year over year. Some of them are averaging 100 to 200% year over year, which isn't bad. But they just, they ran with the strategy and they're using it to their advantage. They're generating income in their portfolios, even in a bear market. So that's, oh man, I mean, that just makes me feel really good. So now they're kind of, it was a certain finite number of people within the neighborhood. I kept it boundaried to the neighborhood, to everybody who was under the same HOA, so to speak. So, I mean, there's a finite number of people who trade or invest in that group, of course.
Mm.
So there's really no need for expansion on that unless I want to go regional, but it's a lot of work running an investment club. I want it to run itself. And that's kind of what I want to grow here. Eventually, our members, like yourself even, you start talking to us on Discord, you start bringing value to the group because you've got a lot of things that you're adding to us. I appreciate that value.
Good.
Eventually, you could be moderating to take over that position so we can go and grow into bigger and bigger things. So we can turn a relatively small community into a massive community, and the gain is to be able to help as many people as we can to change their lives. That's my whole thing. That's the whole thing I want. So that's my dream. It ain't about the money, it's about the lifestyle, and about the lifestyle is having that satisfaction of helping people. That for me is just everything. So
right now what would help me is if Ford just went into the bathroom and took a dump.
Yeah, I see that. Wait, what now? Your portfolio did?
No, I said what would really help me right now is if Ford went into the bathroom and took a dump.
It's gonna range.
It's just ranging sideways.
Yeah. It needs to do something here, but
yeah.
My call side is still net zero, and my put side I've rolled. I wasn't able to sell the short puts yet, but if it ranges down a little bit, I can. But I've still got a long position on the puts too. So.
Yeah, I sold my long when we got up at 15 ish.
Okay.
So didn't quite get top 4 cents away.
Yeah.
Sold that and just waiting for those puts to roll down.
All right, now I'm pushing 30% again on that net position for SPY. Pretty cool. I love that stuff.
Yeah, we got a double bottom on SPY there, don't we? Now we just need to roll back over and break through it.
Yay. My brother's coming out for a visit soon. Well, hey, I gotta break off and take a lunch because I've got some afternoon stuff to do, and then Stone, I'll understand if you don't want to hang out after hours today, but your presence is always appreciated.
Stone, take a break, Stone. Don't push it. Like I said, make yourself hot water, lime juice, honey, and clove.
That's it. And we can
that'll really.
We can just make it as simple as a market review for today. Not a big deal. No, we're not like ranking millions of views on YouTube yet, so we'll get there. But for now, we're doing this to bring value to what we do. That's the bottom line. And it's like you said, Stone, and it really hits home with me, and I'll keep saying it over and over again. Don't focus on the music to make you money, because you'll never be happy. But if you just let the music, or if you just take care of the music will take care of you. That's all you have to know. And it's the same as forgetting about the money and just trading a damn chart. You tend to the music, and music will take care of you. You're just trading the chart. You're not stressing over, how much can I make on this? You're not stressing over how much am I going to lose on this? None of that. You're just trading the chart casually, calmly, trading what's in front of you. And let me tell you, when you make that revelation in your life, if you've been hemorrhaging money slowly over the years trading, this is going to make that difference in just that saying alone. And that also says a lot about our group. What we want to do is we want to just take care of the music. We want to take care of the people. And we want to bring that value. So, our YouTube channel is a little low on volume right now, but we'll get there. We'll provide value, and we'll just keep putting that value out there. That's the whole point of growing that, because eventually, if we get to be generating an income just on YouTube, we don't need to have any other issues keeping our prices low for our members. I mean, we're cheap. We're the lowest cost group you could probably get into for trading communities. As far as trading communities go, we've got tons and tons of value for that membership. But at the same time, the offset is the income we want to make on YouTube is going to make it so we can just keep it that way. I'm not going to increase prices or anything like that. So that's the whole plan. And eventually, if it comes down to our next level library being the key point of joining us, that's fine. We can bring those prices down over time. So if you know anybody who's interested in checking out what we do, but they don't want to pay for membership, refer them to our YouTube channel. Have them sign up, hit the alerts and all that stuff, and we'll take care of them too. We're down to do that. All right, guys. Well, I'm going to call it a day, and I'm going to try and come back after hours and put something together so we can at least do some market analysis and kind of see if we are going to be holding our breath through tomorrow or if we're going to be raging and scalping the living crap out of it. So we'll do what we do. We'll just keep on doing.
Well, so far doing well. I've got I have 2 day trades available for tomorrow if I need them.
There you go.
But like I said, I want to be able to make something of it.
Yeah. Right. And that's the whole point. Like once you get the hang, like I said, once you get the hang of this ability to practice with forward with these strangles, and then you start to learn how to build the complexity that I've been adding to it over time here. I've been jumping in that a little too fast here. I know that we should be taking more time. Yep. Good point. Stone just said, we ain't cheap, we're cost effective. Yes, cost effective, because what you're going to get from us is way, way more than you're going to pay for the membership. So, but back to what I was saying, I need to maybe slow down with this trading these strangles a little bit more in depth first, and then going into the complexity of it. But like I said, I got to cater to a mixed group. So, practice what you are practicing
SQQ
so far.
setting up a cup and handle here.
Yeah, I see that. We're setting up for a measured move on UVXY too.
Yeah, UVXY. UVXY cup and handle.
Break resistance at 1050, and the target is extension to about 1070. Wow.
Yeah.
Let me zoom out on that. Yeah, there's a control bar right at 1069 right there. Sweet. That means SPY gonna rip down through our wolf wave possibly.
Hey, I hope so, man. 'Cause it'll drag forward with her.
Like I said, I got those.
Yeah, just remember, if I talk about SQQQ, just keep your UVXY up there. You'll be able to see the same thing. I mean, they don't always trade in tandem, but
pretty close.
Yeah.
Come on, SPY. As we say, we abbreviate STB because we try to keep it PG-13 in here, but we can occasionally say the S word. We want SPY to shit the bed.
Yeah. Seriously, that's about it.
All right, guys. Well, I'm going to sign off, go eat some lunch, and get ready to do a bunch of minutia today. And then, like I said, I'm going to try and come back in the after hours and put something together to where, even if it's just a brief, market analysis type of thing like we've been doing for just a look at SPY or whatever, we'll put it together. The idea behind that is to not only bring the value to our subscribers, but to also bring a little witty banter and keep it interesting, because we love having a dark sense of humor with this market. And if we can laugh about stuff and not be like the evil maniacal laugh of making money, but the happy laugh of just being able to laugh at what's going on in the market, or just make up some dark humor jokes about it or whatever. Hey, man.
Yeah.
That's valuable too.
Go eat your lunch, Jeremy, okay? You said you're going to go to lunch like 5 minutes ago.
I know. I say goodbye like 20 times typically. All right, guys. We'll see you.